Hey, good afternoon, everyone. This is a recording on inventory and warehouse management process. In the previous modules that we covered in SAP, in procurement and in fulfillment, we came across inventory. Why? Because we had to move material outside of a warehouse or a storage location to ship to a customer, or we had to accept inventory into a storage location because we got a shipment uh, from from a vendor. So we had to deal with inventory and get involved with some of the documents that pertain to inventory. Like if I ask you what document did we create in fulfillment with regard to inventory, it is goods issue, because we had like to ship goods to a customer. Same thing, what documents did we create in procurement? You will tell me goods receipt, because we had received documents from a vendor. So we had to deal with inventory in the two modules, the procurement and fulfillment. So the four goods movement. So when we talk about inventory, we're talking about, as we said, storing material into the storage location or into the warehouse, or moving material from one place to the other, or outside of the organization, or accepting material into the organization. So as we said, goods receipt is created when we receive material. And we actually also, I forgot about production last week, you also had to create a goods receipt because you've received material from the shop floor. A goods issue is generated when you are shipping to a customer. A stock transfer occur. Now, I'm not reducing inventory in any way, but I am moving stock from one place to the other. And then the last one is transfer posting, and that's the only document that is created that does not involve really any physical movement of goods. All it does is change the status or the type of stock from one type to the other. And we'll talk about all of them in a little bit. So goods movement involves, as we said, creating an actual document, like a goods receipt, like a goods issue, but it also reflects on general ledger accounts. Either I increase the inventory or I decrease inventory. So it has to reflect on my assets because of that movement. We have to understand that the inventory is tightly associated with a storage location. Inventory is physically inside of a particular storage location. Someone may ask, where is that storage location? It is within a plant. So you have a storage location that must be associated with a particular plant. You cannot have a storage location without associating it with a plant. You have to have a plant. So the storage location is associated with the plant, and the plant, of course, is associated with a particular company code. So as we said, an organization is a client. Underneath that client, we have several company codes. These are the subsidiaries. Each company code has its own plants, and the plants have their own storage location. And if you remember what we said about GBI, we said GBI is the client. Under GBI, we have two company codes, one for the US, so GBI 00, and then we have one for Germany. Underneath each, we have several plants. So in the US, I have Dallas, I have San Diego, I have Miami, and for Germany, we have Hamburg and Hidburg, I think, is the other one. So look at the goods movement here. We have, as we said, goods receipts are created either because I'm receiving goods from the vendor, or I'm receiving goods from the shop floor. So either because of a production or because of procurement. When I'm receiving goods here in the first one, when we are receiving goods from a vendor, then the goods receipt is always associated with a purchase order. When I'm receiving goods from the shop floor, from the production shop floor, then the goods receipt is associated with a production order. Once the goods are accepted into the storage location, they have to have a particular status. So the status may be in quality inspection. I have to inspect them before I can say they are ready for use. And let's say we will inspect them. So the original status is in quality inspection. Now, if I want to change, if I've finished inspection and I want to start using it, I have to change the status to unrestricted use. That change of status does not require physical movement, but it requires transfer posting. It requires the transfer posting, and transfer posting is just the change of the status of the material in stock. So either I change it from in quality inspection to unrestricted use, or it could be that the goods are damaged and I need to declare them as blocked. So again, changing from in quality inspection to blocked will require a transfer posting. Let's look at the other side now. The goods issue is a document that is created when you are sending documents to the customer, or you are again sending raw materials to the shop floor because they want to start production. So in that case, you will be issuing a goods issue. So remember, goods issue is moving outside of the plant, either because you are going to fulfill a sales order, or because you are starting production. So someone may ask, well, Dallas involves storage and it involves production and sales at the same time. So it doesn't really have, I mean, like you can see that goods issue being part of the plan doesn't have to be totally outside of the plan. So if Dallas is a plant and Dallas is involved with production as well as with storage and sale, then my production process, when I send goods outside of the storage location, I'm still within the plant because I'm going to the shop floor, and the shop floor is still within the plant. Okay, any movement of goods from one location to another is called the stock transfer. So the stock transfer is the change of goods from one storage location maybe to another storage location in the same plant, or from one plant to another. That would is called a stock transfer. Okay, so just to review what we have just said, the goods receipt is a document that we create when we receive goods coming into inventory. So we have, of course, to increase the material in inventory. It can either occur during the production process or during the purchase or the purchasing cycle. If it's coming from production, as we said, it is associated with a production order. If it's coming from purchasing, it's associated with a purchase order. Sometimes we may post goods receipt without reference to any order. No production order, no purchasing order. And let me tell you how. Sometimes vendors send you material for sampling purposes. So you are not, you are not, it won't reflect on accounting in any way, but it has to reflect on inventory. So there is no purchase order associated with it. It's just that the vendor is sending material for experimentation, to try it out and so on. Same thing, let's say after 1 year, a customer is sending back a material because it was under warranty and something happened to it, so they are sending it back to you. So again, you have goods received, even though, I mean, like as soon as you receive it, you label it as blocked item, but still you have to reflect that movement inside of the system. The goods issue, as we said, movement outside of the storage location, and it has to reflect on a decrease in inventory. So in the fulfillment process, when I'm selling, as soon as I put them on the shipping dock, then I have to issue a goods issue, and now ownership transfers to the customer. We also have goods issue under production because we have to issue raw material to the shop floor. We have to issue it to a particular work center where production will take place. So in that case, we are dealing only with raw material or semi-finished goods, like the wheel assembly, for example, in the example that you had to go through before. Or sometimes material is not involved, it's not going into a customer, it's not going into production, but just for internal consumption. So again, you still have to issue a goods issue. Transfer posting, as we said, is used to change the status of the material. So if I'm changing from, usually when I receive goods, I receive the status would be in quality inspection. I have to inspect them, and then I either move them as unrestricted use. I'm ready, I can use them in any way I can sell them to the customer, I can use them internally, I can send them to production. So you are free to do whatever you want with them, or they can be blocked, prevented from using them because they will be scrapped, or because they will be used for sampling. Excuse me. So organizations don't normally use or sell all of the material. They always sample, take out some, and try and experiment with them and see if the quality is 100% or not. If you're keeping the material for a short period before they move into another location, then the status would be just in transit. So the transfer posting always happen when you're trying to change the status of the material. It does not, or it may not require any physical movement. So in case, for example, you buy or you get raw material from the vendor under consignment, which means you don't pay anything until you actually use the material or you sell that material, if it's a trading good. In that case, you do not owe anything, and originally the status of the material is consignment, and then further when you are about to use them for production, you change it into unrestricted use, and then later on, I mean, like you may again change it to something else, but that doesn't require any movement, physical movement of the material. It's just a change in the status of the material. Stock transfers involves now physical movement of the material from one location to another. So let's say we have two storage locations within the same plant, and I move material from one storage location to another for internal use. Then that will involve stock transfer. Again, if one plant is running out of a raw material while another has a lot of it, then I may transfer stock from one plant to another. Now, they may be under the same company code, or a lot of times they may be under different company codes, but still, it is the same client. So stock transfers, as we said, are movement of material from one location within the organization into another. So we can either have stock transfer between storage locations within the single plant. So in Dallas, you are moving from a particular storage location to another, or it can be between plants in one company code. So in the US, you are moving from Dallas to Miami, or it could be in different company codes. So you're shipping from Germany to the US or vice versa. Now, when you're doing the stock transfers, you either can do that in one-step procedure or a two-step procedure, or you have to go through what we call a stock transport order. In a one-step procedure, you know who is the sender and who's the receiver, and in just one step, one document, on one line you specify this will be the sender, on the second line you specify this will be the receiver. So you are identifying the sender or the issuer, the storage location that's issuing the goods, and the storage location that's receiving the goods. And they have to be geographically close. So there is no time gap between sending and receiving the document. In a two-step procedure, there is a gap between, there is geographical separation between the two storage locations. So you have to put the material in transit. So on the first step, it involves moving out of the sender to a transit, and the second step involves moving from the transit to the receiver. Now, again, the time gap can be, again, like a day or a couple of days, but it shouldn't be involving a lot of cost transferring from using the two-step procedure. Now, in case when the transportation cost is high, then in that case, you will have to go with a stock transport order. Also, and that will always be the case if you are trying to transport between different countries. It's not just also the transportation cost, but also the valuation of the goods. Now I have to value the goods differently. So moving from Dallas to Hamburg in Germany definitely will involve a different valuation. So I have to go, I cannot just like move materials between the two countries or under different company codes using a stock transfer and that's it. I will have to go with a stock transport order. I have to receive an order, and it will be basically like selling one part of the organization, selling to another part. So let's take a close look at each of these again. So here is the one step and the two step. In a one step, as we said, we're moving stock from the sending organization in the receiving organization. One document is being created and that's it. So in that one document, on one line you're specifying the sender, on another line you're specifying the receiver. Now if you look at the part on the second, on the upper part of the figure, you see that we have two steps. So you move the stock and you have to put it in transit before moving it into the second storage. And that's, as we said, because there is a time lag between to move from one storage location to the other, so it has to go into transit first before it can go into stock. So when we are transferring from one location to another location, we can do that within the same plant, or if we have, and in most cases, if it is within the same plant, then a one step would be sufficient. When would I use a two-step? I would use the two-step if the person involved in sending is different from the person involved in receiving. So even though it is within the same plant and I'm transferring from one storage location to the other, I will not use the one step, simply because two people are involved, must be involved in the sending and the receiving. So and that's what they call segregation of duties. You cannot be the same person sending and receiving at the same time. In order to do checks and balances, these two people have to be different so that you would prevent fraud. And that's why you would go with a two-step procedure. When you're transferring goods from one storage location to another storage location in the same plant, that doesn't normally involve any change in the valuation in either the cost or the price of the material. Why is that? Because usually the valuation is done at the plant level. So if you are moving within the same plant, there shouldn't be any change in valuation. So there won't be any financial impact in terms of devaluing or upgrading or increasing the value of a product. Sometimes, in some cases, a material is valued differently. So some part or quantities of the material is valued at a higher price than other quantities. Sometimes, like you're buying from several vendors, so material that you buy from vendor A might be valued more than material bought from vendor B. And that's what we call split valuation. So when this is the case, when you're moving material from one storage location to another, and there is split valuation, then that will definitely involve creating financial documents to reflect either the increase or decrease in price. So remember, split valuation is when different quantities of the material have different values. They have different pricing value or something. That's what we call split valuation. So transferring some quantities from one place to the other will result in changes in the value of that material. So you can see movement within the same plant. You can move unrestricted use from storage location A to storage location B. You can move in quality inspection from A, and then because they have already been inspected, they become unrestricted use in B. Or you move in quality inspection and from A, and they become in quality inspection in B, or move blocked stock, and then because they have, that's like transit, and from A, and move them in either to in quality inspection, or they continue to be blocked in B. Now, so if you are moving within the same plant and you are using the one-step procedure where you are in one document, you are specifying the sender and the receiver, and there is no change in the value of the product, then I can be in any status in A and move to another status in B. It doesn't make sense, of course, to move from block all the way to unrestricted. You have to go through in quality inspection and then do a transfer posting to unrestricted use. Because if it is blocked, it's blocked for a reason. Either it has not been inspected or it continued to be blocked for sampling, as we said, or for experimentation. If we are doing the two steps, now I can only move unrestricted use, and it goes into transit, and then with a transfer posting becomes unrestricted again. So remember, with the two steps, because of separation, geographical separation or dispersion, then you will have to move only unrestricted use to transit, and then transfer posting to unrestricted use. You cannot do it in one step. Remember, it is called two steps because on one line you are moving from unrestricted use to transit, and then on the second line it is, or in a second document, when the stock is ready to move to permanent storage, then they move from transit to unrestricted use. Now, the second movement involves moving from one plant to another. And again, you can either do it one step or two step, depending on how close these two plants are. But you always have to reflect on the inventory, the quantity. You have to decrease the quantity from one and increase it to the other. So when we are moving between plants, it's always unrestricted use. So material that there is no restriction on how you are going to use it. Are you going to use it for production, selling, or whatever? That's unrestricted use. It doesn't, and think about it. It doesn't make sense if you are moving from plant to plant because it involves transportation. It doesn't make sense to move goods that needs to be inspected. Why? Why would you move a good to be inspected from one plant to another? Well, inspect it first and then send it to the other plant. Same thing for blocked. If you are going to scrap them, scrap them. Why incur extra cost in order to scrap them at the end? So no need to transport the goods if they are to be scrapped or if they are to be inspected. If they need to be inspected in the first plant and move them to unrestricted use and then transport them to the other plant or transfer the stock to the other plant. Well, we have to create, of course, material documents to show that stock transfer. And of course, it has, because financial documents are created at the plant level. So at a plant, you have to show cost. You have to show, of course, the revenue that are being generated. So material documents must be created and financial impact must be created as a result of a plant-to-plant transfer. But if I am transferring within the same plant, as we said, we don't need any financial, there is no any financial impact, there is no effect on the general ledger. So as you can see, when moving from plant A to plant B, we can only move unrestricted use material because, as we said, it doesn't make sense to move blocked material or to move goods that are under inspection still. When you're moving them, moving from plant to plant will always involve financial document, creating a financial document. Why? Because, as we said, materials are always valued at the plant level. So when you're moving from one plant to the other, then the valuation may be different. You can either do it in a one step, so I'm moving unrestricted use from plant A to plant B, and in one material document I am identifying the receiver, as we said, and the sender and the receiver. Or I can do it in two stages, again because of geographical location. I can put the material in transit and then move them into permanent storage. So we have to understand that there will be financial documents involved when I'm moving from one plant to the other, and there might be difference valuation in the valuation of the product. Why? Because they are usually goods are valued at the plant level. Now moving from one company code to another company code. These are like two different companies. So again, you can do that. They are of course under the same client, but two different companies. You can either do it on a one step or a two step depending on the geographical dispersion. But you have to create in that case two financial documents, because remember, each company code has its own balance sheet, has its own income statement. So there's no way that I can only create one document. I have to create two financial documents for each company code. One line item will have to account for the material, and the other will have to account for the transfer. Now, a lot of times when you are moving from plant to plant or from one company code to another company code, the transfer of good involves transportation, involves again valuation, a different valuation of the product. And if we are talking about two countries, I need to be able to track the actual transfer, like what Federal Express would do, allow you to see where the goods are in transit. So to be able to do that, instead of just handling the transfer, we have to create a stock transport order. And it's the same like selling. You are selling the product or the material from one plant to the other, or from one company code to another. Of course, we would never have stock transport orders within the same plant. So one plant is selling to you, the other is purchasing from it. So definitely, if that's the case, when we have the stock transport orders, then one plant will be doing procurement, the other will be doing fulfillment. So remember that the stock transport orders are created because of, in order to account for the high transportation cost, to be able to track the goods in transit, and again to allow for different valuation of the material.